Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap. My name is Doug McKay. This is our morning leap or pre-market trade plan setup for November the 13th. It is Friday the 13th. Everybody hopefully is having a good week. Quantum Leap is a subscription service. We are a live trade room. We do these live morning sessions, and then we do live trading and analysis during the course of the day. I have to apologize. I have a cold. I'm likely going to sneeze, so bear with me. Before we get going, we do need to read the disclaimer, and nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Please trade your own plan, do your own due diligence, and trade your own risk metrics. If you are interested in finding out more about Quantum Leap, please give me an email at quantumleapfutures@gmail.com. I do not have a website. This is not a commercial venture. This is a group of retail traders operating, in a self-organized learning environment. Or you can call me on my cell, or Skype me, or look for more YouTube videos by doing a search under Quantum Leap Futures. And if you like what I do, follow me on Twitter at Crazy2. Hold on one second. Okay, let's get the news out of the way. We had core retail sales came out less than expected. We had PMI, or PPI I should say, came out less than expected. Had retail sales came out less than expected, and core PPI less than expected. We popped, then we dropped, and now we're working our way up. We do have University of Michigan Consumer Sentiment preliminary coming out at 10 a.m. Eastern Time, business inventories and inflation expectations at 10 o'clock, and then we've got natural gas. And that's about it for the news. Yesterday, we were looking for a rotational day with the downside bias. We did get a very rotational day. I warned everybody. If you were not experienced or you're struggling, yesterday was not the day to trade. I actually got myself a little bit in trouble. I had a great gold trade in the morning. I got myself in trouble on, I forget, I think it was here or here. Anyway, I gave most of my profit back, or I used all my Theo, and then this moved down later in the day. Saved me. I ended up with 20 points on the day. $1,000 on gold, so I actually had a good day, but I did not trade well. Now, somebody sent me an email yesterday, and I want to address this. And they said that I worked my way out of my trade, and nobody could ever do that. What you have to realize is I'm human, and I did dig myself in a hole. I had Theo I could work with, and I held onto a trade that got me in trouble, and I did double down. I actually didn't just double down. I took, I fired 3 bullets, and I got pretty large for me, and I was able to work my way out of it. But I said it was a bad trade. It was a bad trade, and it was. But I'm trading my money, and just like anybody, I go off the reservation. And I'm trying to work through this. I'm getting in the habit of doing it last week or so, but it is not a good habit to get into, and it's not something that I promote or I teach. In fact, I teach against it. But again, I'm emotional. I'm human. I'm going to get myself in trouble, and sometimes I'm going to make mistakes. Did I get myself out of it? Yes. Was it a good trade? I said right there and then, this is not good. Do not do this. But I told you guys, a long time ago, you're going to see the good, the bad, and the ugly. And yesterday you saw good and you saw ugly. Plain and simple. It is Friday the 13th. I saw this the other day. I put it up again today. This is interesting. These are the returns on Friday the 13th since 1928. You can see we've had 12 Friday the 13ths going all the way back to 1928, and you can see that this has been one of the worst days when it falls in November since that time. So just an interesting tidbit. I think that we could see some further downside. We are at an area that I think we're going to see some rotation. I'm going to get into that in just a couple minutes, and I apologize if I'm sniffling and sound stuffed up, but I am exactly that. Each morning I like to start my day looking at the macro and the micro trends. I use a simple candlestick chart with a 9 and a 20. This is a 9 EMA, this is a 20 SMA. We've had a wonderful trend, upslope and separation. September and August we violated the trend. October we took it back. November we're testing, coming back down and testing the 9 EMA from above, but the trend itself is still intact. On the weekly, I've been talking about this naked cross here for a couple weeks now, and the interesting thing about this is we've got the naked cross at 2030 and a quarter, 2030, 50, whatever you want to call it. The weekly ATR, average true range, right now is running at 67.31, and based off of our weekly high at 97.75, the weekly ATR target is 2030, 50. Which is right here at this naked cross, and I'm expecting to test this. It's within range. It is a naked cross. It is our weekly ATR. We're closing the tech gap that we created on the weekly. That is now closed. So just goes to show you should pay attention to your weekly ATRs, your average ranges, because of the fact that here we are, after starting the week very strong. We're coming back down into the 2030. The other thing that this 2030 level is I was talking about that crab formation. We had two support levels. We had a support level at 2050. I was using 2049 and a quarter. And then we have one at 2030. If we hold 2030, this crab formation stays intact, and it has a target, believe it or not, for the end of the year at 2150, but it also has a target overall measured move up into the 2300s. So I thought that is interesting in itself. Going down to the intraday, see if we're what type of trends we have coming in. You can see we've had this strong downward trend the last 3 or 4 days on the 4-hour. We do have a technical gap here, but we do have a strong slope and separation to the downside, so we have a downward trend on the 4-hour. On the 1-hour, same thing. Nothing's changed. Downslope trend is intact. On the 30-minute, we had consolidation, then we had continuation, we had a technical gap. Now we've come up and tested the gap, closed it, tested the 9 EMA, failed on it, and we do have possibility of continuation on the 30-minute. On the 15-minute, same thing, and on the 5-minute, we have challenged the trend, and we're getting consolidation right now. We just created a naked cross, and here we are coming down to close it out right here. So we see some things weakening, and we're challenging the trend down as we move down into the smallest time frame. Taking a look at the big picture, we were up in this this balance area, this micro composite that I drew from February 5th through to the 19th before we fell out of that balance on the 20th. We got down, we found balance down here, then we broke out, accepted value higher, significant breakout candle, came back inside of this value, chopped around, value higher, poked ahead above, went into price discovery, failed at rule of 10, rotated back down through value, couldn't hold this 2070, and then we just fell out of value. And where did we come? The 50% of the significant breakout candle. We've been noting this and talking about this move back down here. If we fell out of balance at 2037.75, and we went down yesterday, didn't make it down. We closed, had a low of 2040. Then in the Globex, we went down to 2038, missed it again, rotated back up, and then failed overnight and came down this morning and took out that 2037.75. So we are back in this area right here, which is very blunt on the profile. I'm expecting a rotational day today. I think we're going to chop around in this area as we try to determine fair value. Couple levels to note: the 4175, 4150, 36. And if we hold the 27, 28 area, 2750 to be exact, then I'm expecting to chop around here, maybe even come back up and test the 49.75. We had a neutral extreme day yesterday, so we had a very rotational day. Neutral days beget neutral days, so I'm expecting to have another neutral day. I don't think we're going to have a neutral extreme, but I'm expecting very rotational and a lot of chop in this area. So be careful today. Taking a look at the overnight, we have a double distribution overnight. We have this LVN, and this LVN runs from 38 all the way up to 40. So this whole area right here separates the two distribution zones. So above 38, be careful, with the longs until you get above the 39.75.40 area. This is yesterday turned out to be a bit of a P-shaped profile with a kind of upper and a lower distribution on the P. I still believe this to be more of a P-shaped profile. If you look at it in the profile, let me just in the market profile. It looks much more like a P-shaped profile. You can see that looks like a P, and P-shaped profiles follow a couple downtrend days and generally, have a tendency to continue the trend down in the next couple sessions. So just note that we do have that. We have a single up here at 45. So I do think that we're going to get some rotation up to test this level, possibly even that 49 that was our key line in the sand that we're now below. But I think we're going to get a lot of chop in this area between the 27 and the 49. Our overnight high is up at 46. Our overnight low is at 33.50. Our average true range, our daily average true range is running 22.89 off of the 46 high. That takes us as an ATR target to the downside down to 23.25. Right near that target at 23.50. We'll take this out. We'll put this in its stead. Our weekly ATR target is 20.30.50. Our overnight low is 33.50, and our daily ATR is 22.89. So our upside ATR target comes all the way down from 79 down into 56.50, which happens to be our naked VPOC. Remember that our year open is 2055. So until we get above that, we are in a bearish year. Only took 11 months to get into a bearish year. And we have this LVN area between 39 and 40. You can see that our range low is 40. I'm going to use this 3850. I'm going to use 3950, so I'm going to bracket the 3850. The 50% significant breakout candle is done, so we don't need that anymore. Our overnight VPOC, look at our overnight VPOC is right there at the 3750. Right where we're trading. Oops. We don't really need this anymore, so we can get rid of that. Expand that out. And again, I'm expecting rotation today. I think we could possibly take out the overnight low and the overnight high today, because I am expecting a neutral day, and it's going to be bumpy road. It's going to be a bumpy road today. Above 39.50, or actually even into the 40, you want to get long above 40, not above 38.50. If you want to get aggressive, you can get 38.50 and get funded into 40, but the safer trade would be to wait to get above 40. Then I would be looking for this upper distribution. Target that we had at 41.50 is now 41.75. Come on. I would put a trade area here at the 44 for a move to take out the overnight high if we get above it. And then our value area low is up here at 48. I'm going to incorporate 48 and 49. Remember, 49.75 is our key line in the sand. I'm not anticipating getting above that 49 today. If we do, then your targets above is the micro composite value area low at 51.25, right near this little HVN and just below the midpoint from yesterday. What I'm talking about is this value area low right here at 51.25, the balance that we just fell out of. And then above there, a move to test the year open. You could put a trade area here at the 52, actually 52.25, this little LVN. But I would really wait until you're above the VWAP from yesterday to get long. Well, if you're not already long, but to add to long, and then into the year open test. Take out the naked VPOC, our upside ATR target, and then the only other thing really up here is this 59, but you have to incorporate the 60.50 as well. And then above 60.50, I would target this 62, trade level 63.50. And then above there, we have all our targets that we have been looking for. We do have a naked cross and a gap close up here in the 69 area and 74. Remember that the most traded price is still up here in 78.25, but we've broken out of this balance. I really think we're going to come down. The main target below is going to be this 21. I don't know if we're going to get there today, but we have to look at it. So looking at our downside targets, we have the 31 and a quarter. It's actually 31.50. It's a range high from where we accepted this value before the breakout candle. And then you've got the CLVN at 27.50. And then you've got this this microcomposite VPOC at the 21. That's going to be our main target below. Did I do that right? 46. Those are high. 22.89. Yeah, it's 23. So that's our downside target. So it's just below that, or just above. I can't spell worth a dime. Sorry, gang, I'm not feeling great this morning. And then below that is the 1750. And then 11. I had 13. Why did I have 13? Should be 11. And then below that, we have that naked close at 0850. And this target should be 0675. And then really 04 and a quarter. And then we have the 1999.50 again. And below 99.50, the next big target below is 95. Not that I'm expecting to get down here today, but you never know. All right, so we are currently trading 37 and a quarter. Expect for them to chop around. I would anticipate a test of the range low and this 2040 level. If we leave the overnight low alone and get inside a range, look for them to rotate up through into this 46 and take out the 46 and test the value area low and the key level above at 49. I'm going to actually change this also to say our key line in the sand. And really, our key line in the sand today below for possible trend day is going to be the 1750. All right, so my main hypothesis is a rotational day with a possible range of moving up into this 49 area or down to this 27.75, possibly even extending down to the 23.21 area. But I am expecting large rotations today, especially with some of the news that we have. Taking a look at the Renko with Keltner. We're currently above the Keltner center line. We're getting a little bit of a basing pattern here, so pay attention to this. 36.50 is the center line. We came up and bounced and rejected the VWAP overnight, coming back down, testing it. Our overnight VWAP is, our VPOC is right here. We hold above this center line and move up into the Keltner upper line. Will take us up to take out the overnight, yesterday's range low. And the naked close at 40.75. It tests 42.25. Below, a move down will take us down into that 31 level and take out the overnight low and test this 31.50 target and that naked cross that we have on the weekly at 30.50 and our ATR downside target. Taking a look at gold. Gold is still finding some weakness. Took another swing at it yesterday. I actually got a nice trade out of it. Took a swing at it last night. Got in, got funded, and came right down and took me out at Theo. Balance right now is in around the 83 level. Key level today is going to be this 73.40. I'm going to be watching this today. I'm going to take another swing long if we get down to the 73.40. If we break it, then I'm going to short. Plain and simple. I said I was going to continue to try to find places to get in long until we got down to the 73.40. Below 73.40, I flipped my hypothesis for a bigger move down on gold. But gold's moved too quick, too far, and I still think that we've got to do some retracement up. I think the 61% retracement level is up here in the 1137. Let me do I just want to do that just to refresh myself. Since we did make the move down. Oh, it's 46. So up and around this balance area right here is our 61% retracement. Our 50% is in the 32.50, and the first retracement target is 18. So you can see that these key levels also match up with former VPOCs or microcomposite VPOCs. Just remember that the most traded price going all the way back to 2008 is still up here in the 1200s. But key level today is 73. There really isn't any other trade that I can see that would give you any edge other than some type of a pattern. We've got to wait for the 73.40 again. I took the long yesterday off of this level, got in at what did I get in at 74.30. So I'll wait for that again. But if we come down here and we don't hold it, I'll get short. Plain and simple. Don't put your own bias into it. Trade what the market is giving you. So that's going to complete the pre-market planning session. As always, trade well, trade safe, and we'll catch you on the flip side.